The market pulls back to test the CPI lows. Did the bulls fail to launch? This is Invest with Jacob. Okay guys, so in last week's video, we had the bulls ready to break out, and despite pushing it to the limit on Friday, they were unable to push through and pulled back a little bit on Friday and on Tuesday as well. So now the question is, did the bulls fail to launch? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, another excellent day in the room. We actually went 2-2 on day trades, 2 small losers and 2 decent winners for a winning day again. If you want to be part of a winning team, check out later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And we still have our 1-2 setup in place, although it's holding on by a thread. And given the overall action and some other things that we're looking at, some other indicators and things we teach in our Elliott Wave for Beginners course, it does look like the market wants to make another low before heading higher, or at least another low before heading higher. And that's kind of where our main path lies right now, is can they hold yesterday's low down here at about 47.80, or are they going to come down and dip, and how deep are they dipping? So our primary path, okay, is going to be that we still have a wave 1 up, and we're actually building a slightly bigger wave 2. I think they will likely come back and break this low from Tuesday based on some indicators that I talked about. So I think we're still building wave 2, where we're going to get an A, B, C into this 47.70 area. And then this is really a critical area. When I say it's our primary path, it means, yes, it's the expected path. But in this case, and in several cases along the way here with all this chop, we're kind of waiting for resolution of this pullback area. So what happens at 47.67 is really important. Should they pull back into that area and hold and give us an impulsive move up in wave 1 of 3, we'd be looking for the breakout to 4,900 plus, where we go to wave 2 of 3 and then a breakout. So remember, rarely is it ever a direct breakout. You need a 1 of 3, then a 2 of 3, and then the breakout. So assuming they can hold the 47.70 area, that would be our primary path, that we would be looking higher in a breakout toward the 4,900 area in a 1-2 setup from there. Now, if they aren't able to hold this 47.67 low from January 9th, if they're not able to hold the 9th low, or they come into the low and give us a pretty clear A, B, C up, then we'd be looking for a bigger pullback and potentially even that B wave that I spoke about, where circle A is in place here, and then we have an A, B, C to the downside toward that 4600 area. And I do think breaking this January 9th low is a big deal for that. They can obviously still hold the 618 or 764 down here to 47.35, but I think if they break this low, they'll see some momentum and get a little bit of acceleration down toward the 4500, 4600 area before resuming back to the all-time highs. So in either case, I think we're going to all-time highs in the 4900 to 4950, even 5,000 area on the ES. I do think that's going to happen regardless, but how we resolve up here is important, and especially the 47.67 area and how they bounce off of that, and or if they hold that area, what it looks like. So again, if they hold it and give us a 5-wave move up, we would expect a small pullback and a breakout. If they cannot hold it, or they give us a 3-wave bounce, then we would expect a breakdown, and that breakdown again can hold as low as 47.35 and still be a wave 2. But I think that if they do break down, it's going to start to become more likely we see that bigger pullback into 45 to 4600. Over on the NASDAQ, now the NASDAQ is a little bit cleaner than the ES. The ES has a little bit more overlap, but it's the same principle. We've topped here, and we're looking for this to be all of wave 2 here, back on January 11th. And then from there, we have a potential wave 1 up and a wave 2 down for 1 of 3 and 2 of 3. Now, the reason I think we may come back down and break this low is, one, when you get a wave 3 of 3 starting to break out, you generally don't see it come all the way up to this point and then break all the way back down toward the lows like it did here. That's not really indicative of a wave 3 of 3. Usually they get up here and they get up to support, or I'm sorry, resistance in this case, and they kind of chop around, then start to pull back a little bit and then break out. But this pulled back pretty deep, And that's not usually what we're going to see when a wave 3 of 3 is ready to go. It doesn't mean it can't be a wave 3 of 3. Of course, they can be wave 1 of 3 of 3, wave 2 of 3 of 3, and then off to the races. But until they prove that, this isn't what you would want to see overall. And when I see things that don't exactly look how you anticipate them to, or aren't really what you would expect, then I become very cautious about that count, because more often than not, when things don't look like you would expect them to look, they don't follow through. So NASDAQ is a little bit more bullish in setup than ES, as it doesn't have nearly the depth of pullback into this low of its wave 2. But given ES's setup and the overall indicators that we've been looking at, it would make sense for the NASDAQ to pull down and test this low a little bit more. This is not a very deep wave 2 in comparison to wave 1. And I thought we'd come back down and test these lows. And right now, the C wave does look like it would come down and test that area for a deeper wave 2. So you'd have, this is A off of the top. Excuse me, let's do that one more time. This is A off of the top, and then B, and then you'd be looking for the move down here, where this is 1 of C, 2 of C, and then you get the breakdown deeper to give you a better wave 2 to the downside. Now again, if they get to this area, the 16,666 area, how they react here is important. If they blow through it to the low side, then it can be indicative of us moving more toward that 16,000 area and the deeper wave 4 I was talking about. So remember, that would be A, B, and then C down towards 16,000 here in bigger wave 4. But if they're able to hold this low here, or spike below it and come back and give us a 5-wave move up, we would expect a breakout type setup on the NASDAQ. So off of this low at 16,666, 5 waves up, we would look for a 3-wave pullback and then the breakout. Whereas if we get a 3-wave bounce off of that area, should we get there in ABC, we'd look for more of a breakdown towards 16,000 overall. So both charts kind of have that same look, where we can be moving into the downside a little deeper for this circle wave 2. And as long as they can hold the January 9th lows on both charts, we would be looking for them to make a wave 2 low and then start back up in wave 1 of 3 and then give us a 2 of 3. Again, they can hold this low here on both charts that they made back on the 11th, the CPI lows. And as long as they hold those, they do have the ability to break out directly. But the overall structure isn't great for that. And so I would rather see a better or more expected structure off of this wave 2 of 3 low. So that's the reason we're looking for a deeper circle wave 2, is that the overall structure here off of this low isn't what we would expect to see. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans that both come with a 7-day free trial. That's because I want you to get in there. I want you to make sure you love it, become part of the team, see how we do things, see if it's even for you. It's not for everybody. And as long as you love it, you can stay on and become a monthly member. If not, you got to try it out for free, no harm to anyone. You can cancel at any time. So we have that 7-day free trial there. We also have our Elliott Wave for Beginners online course. And I do have our advanced course getting ready to launch. I just have to do some finishing touches on it and it will be out. But the Elliott Wave for Beginners online course and the advanced course will help real traders make real money and understand the market in a way that makes sense. It's very confusing when good news makes the market go down and bad news makes the market go up. It's because the news cycles don't matter, but key levels do, and Elliott figured that out a long time ago. These key levels give you an upper hand on the rest of the market because you know what to look for and what happens when those key levels hold or break. This gives you a huge advantage in trading and lets you understand a market that is irrational. This course is 25 videos where I go over 3 sections: the introduction, where we go over the expectations, the emotion, the mindset, and why it works; your chart setup and tools, which is probably one of the most important sections, where we go through each tool you need with Elliott Wave and why and how to use it. And then the Elliott Wave for Beginners area, where I go through each of the waves, what their targets are, how to measure them, what they look like, how to find out what we're looking for, when they break, what happens, when they succeed, what happens, all the things you want to know: corrective depth theory, theory of alternation, the pivot, everything you need to know about Elliott Wave to understand the market in a way that makes sense. And the cool thing, guys, is if you don't want to pay the $67, I completely understand. And you can get this course for free simply by becoming a monthly member. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all training material we release. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. And if you're looking for futures trading, income trading, individual stocks, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, PT's income trading that, guys, is crushing the market. He just started it right before the end of the year, and over the last 6 weeks, he's making like 30 to 40 points per week and looking at about 100 points per month. He's absolutely killing it. It's a really cool trading style. It's something you kind of have to see, just like his advanced training style, where he gives you his reduced risk binary trade, and he gets you in at a cheap price and gets you huge multiples on your money. And again, it's something you have to see to understand, and that's why we give you a 7-day free trial, because we want you to see that and make sure it's for you. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. It really comes down to these lows on the 9th. Assuming we break the CPI low, that's what comes into focus, and that will be the determining factor. Below that, and we'll really have to watch, I think the B wave very much comes into play at that point, but they can hold down to 47.35 in a bigger wave 2. You would expect them to hold around 47.70 for wave 2, and below that we start to look at the bigger B wave to the downside. On the NQ, same type of setup. They need to hold the CPI lows, and then really we'd look for them if they test this 16,666 area. If they hold that, we would look for the direct breakout higher. However, if they can't hold that area, we're looking at the 16,000 area next. Guys, that is your market update for today. I will talk to you tomorrow.